Hi, this is Karen from Cassidy Accounting, bringing you the second installment of our Basic Accounting Terminology series. This video, we will be talking about income, cost of goods sold, gross profit, expenses, and net profit or loss. Now, this is not a deep dive into these terms. It's just a basic understanding of the terms. We will do future videos that will, go into a lot more detail and may even target your specific industries. If you leave me a comment, like and subscribe and say, hey, can you tell me how to understand my restaurant business or my construction business? I will be more than happy to tailor-made your videos to what you need to understand. We just want to reiterate that we at Cassidy Accounting want our clients and connections to be able to understand the concepts we are speaking about for increased knowledge in your business practice. Okay, that's all that we're trying to do, is to help you out. Because when we provide a financial statement and we want to discuss it with you, we want you to have that foundational knowledge to understand at least the basics. Now, the first topic we're going to talk about is income. Income is what the business makes. Most businesses either sell products or perform services. Income received is obviously very important for a business. Piece of advice, though, is not to overprice or undervalue you or your product's worth. Also, you want to spend your initial money sparingly on marketing and watch out for potential get-rich-quick schemes. More on that in the future, and I will share some tips on how I got a little overzealous in my marketing and, didn't stick to a certain kind of a budget, but just went all crazy and, didn't have the results that I really wanted. So we'll talk about that in a future video. Cost of goods sold, or COGS, us accountants, we love our little acronyms, is the cost of manufacturing or acquiring the product that you sell. It is really not for service industries. I will do a full video on COGS because it varies between industries, such as retail and manufacturing, with the accounts that can be included in these totals. I have listed several items that can be included in this section. Okay, you can see there's cost of labor, there's supplies, overhead, and that has a lot to do with things that are manufactured, work in progress, which is cost accounting, and 263A costs. Those we'll get into more in depth at a later date and time. Gross profit is income less the direct cost of acquiring, that income. Again, service industries, net income and gross profit will be the same because you really don't have COGS. You don't put your labor or your supplies up in that cost of goods sold section. Expenses are the indirect costs of doing business, especially in the manufacturing sector. I have listed some examples here: advertising, depreciation, insurance, wages, office supplies, utilities. Okay, this is no way an indication of all the expenses that you can encompass, and you can be as specific or as generic as you want to be, depending on your needs. I've seen a lot of people break down advertising into several categories because they wanted to see how much are they spending on social media, how much are they spending on print ads, and so forth and so on. This is a very important section of your financials to either increase or decrease your profit depending on your needs. You want to increase your profit by lowering some of these expense amounts. You want to decrease profit, especially if you're starting to look towards the end of the year and, how am I going to pay on taxes? How is this going to pass through to my personal return? I may want to, I was holding off on buying that new piece of equipment. I may want to do that before year end in order to lower my taxes. Finally, net profit or loss, unfortunately, we do sometimes have the loss, is the difference between income less COGS and expenses. It is the bottom line figure that most businesses look at to determine the success of their endeavor. Okay, it is no way indicative of your cash flow because, as you saw, one of the expenses is depreciation. Depreciation is not a cash item. It is how your assets are decreasing in value. So it's net profit as a guideline. It is used to figure out how much taxes you're going to owe, but is no way indicative solely on what your business is doing. So there are a lot of other uh, wonderful reports that you can get from your accounting software, statement of cash flows, which will kind of tell you what's coming in, what's going out. Is that good? You want more coming in than you want going out. And we again will talk about that in further videos. I just want to thank you for watching. Please like and subscribe, and we will be starting some deeper dives in the upcoming weeks. Thank you, and God bless.